North American volumes were down for a second straight quarter. Now, you did get a boost from higher pricing, but I'm curious as to how long you can sustain higher pricing in order to maintain margins and profitability.
Yeah, I think the North American business was, of course, a little softer in the first quarter, but I think it should be seen in the context of the later timing of Easter, which tends to affect the business, and also a bit of negative weather in the first quarter, and a little less emphasis on some of the low-margin water business. So I think the U.S. had a solid quarter in volume. Obviously, we'll be looking in the future to get back to flat or a slight positive, but our principal axis of strategy in the U.S. is the development of the portfolio and the focus on the packaging, the focus on smaller packaging sizes, which tends to look like more flatter volume and solid price mix. But it's a strategy that's helped us expand the consumer base in the U.S. And win in the marketplace. So it's a plan that's working for us, a strategy that's working for us, and I'm sure the U.S. business will have a good 2019.
Well, again, you were able to boost prices. Can you do that again?
We took pricing last year. I think that was more of an extraordinary year based on some of the commodities effects and the very U.S. specific situation of freight and the way the freight industry worked in the U.S. Those effects have softened coming into 2019. So again, I don't think we'll be seeing the very atypical situation we saw in 2018. Pricing will be there. There's still inflation in the economy, but I think it'll be a more of a normal variety. And of course, we'll be looking on where and how to do that so that ultimately we continue to focus on value for the consumers, because they'll only be willing to pay the price if the brand and the product they're getting is the one that works for them.
Mr. Quincey, I'm wondering about Costa and the coffee acquisition and how you're going to use it. We are expecting that to be rolled out shortly. What details can you provide about what your plans are for Costa and how firm are the plans even at this stage?
So firstly, I mean, obviously we managed to close it in January, which was well ahead of schedule, which was good news. The integration and the transition over to Coca-Cola has gone very well, moving it over from Whitbread, so that's been very solid. Both companies have worked to make that happen seamlessly ahead of schedule. Results are going well, and of course the first step in establishing and using coffee as a part of a broader coffee platform will be the ready-to-drink coffees that we'll be rolling out in the second quarter, later in the second quarter, and then we're working, with the management team there to really update the plans and the visions we saw for accelerating not just the ready-to-drink coffee, but the vending machines and the beans and machines and stores in Europe and out in Asia, and we'll be pulling all that together in the course of this year, and you'll start to see more as we go forward.
Just staying with the UK for a moment, one of the things we have seen over the last couple of months is bottlers building inventory in advance of Brexit. Now that we have a 6-month kind of hiatus is probably the wrong word, but we've got a pause in that potential exit coming through. How are the bottlers going to handle that inventory? Presumably there's quite a lot of working capital tied up here.
Yeah, the inventory build was very related. It is related to Brexit, but is very specifically related to the potential disruptive or a no-deal Brexit exit. It could have been the end of March, and now, of course, it's been postponed at least until October. I think the approach that we're going to take with our bottlers is going to probably center around keeping that inventory on hand through to October, or at least through until there's some clarity on how and when Brexit will occur. Because this is inventory not just because Brexit's going to happen, but the idea of a disruptive Brexit, particularly if there were problems at the ports in the UK through which the concentrate travels not just to the UK but to some other European countries, that's what we're protecting against. And if that risk were to disappear, then obviously we could wind down that extra inventory. That hasn't happened yet. For now, I think we have to assume that will keep it through October.
Now, you have a high dividend payout ratio, I believe about 73%. Any thoughts as to what you might do instead, or if there would be better opportunities, say, for example, looking at some bolt-on acquisitions or some internal investment?
Yeah, we got a high dividend coverage ratio, but our shareholders like our dividend. We certainly are focused on having that continue to grow into the future. We believe our capital structure has enough flexibility and space within it to both fund the dividend and future growth of the dividend, as well as make the bolt-on acquisitions that we need to make and reinvest organically in the business. Of course, if something big were to happen on the M&A front, we could look at that, but really the ongoing plan is invest in the core business, fund the dividend and the bolt-on M&A, and we believe those three things can be done within the current capital structure on an ongoing basis.
So where might you be looking in terms of bolt-on M&A then, and would you be considering expanding your interest in energy drinks? You have an 18.8% stake in Monster Beverage, for example.
I mean, our strategy in terms of bolt-on M&A is really, in a way, filling in, is more regional, because we are number one or number two in the broad categories across the world, but it's not a global average. It tends to be concentrated positions in some parts of the world and gaps in others. So our bolt-on strategy tends to be about filling in certain categories where we have less developed positions around the world, and that's really the focus of our M&A strategy going forward.
Mr. Quincey, the company has vowed to get rid of all single-use plastics from the supply chain. How much plastic did Coke generate, did Coca-Cola generate in the last quarter?
I don't have a specific number for the single, but our focus is on making sure the plastic we use, particularly the PET plastic, can be recycled. And so the idea is that it never has to be a single-use bottle, that we can not only make it recyclable, but that we can recover it and then reuse it and remake future bottles, so that each bottle that goes out actually has an intrinsic value and it can be recovered and reconverted back into bottles. Of course, in the rest of the supply chain, there are some elements of single-use plastic, and we're working very diligently to see how we can convert those into other materials that are recyclable. But our objective that we put out last year was by 2030, and in the case of Europe by 2025, not only to make it recyclable, but to recover the equivalent of all our packaging and then reuse it, so that in the end, the packaging is never single use.
And in terms of the cost associated with that, what is that a significant margin effect? I'm wondering how we quantify what that is going to mean in terms of the bottom line.
I mean, it's going to be a material amount of money. I think the amount it's going to cost, or the amount it's going to take to sort this out, is very dependent on the system that gets put in place. That's why we're very focused on working with other manufacturers, with retailers, with government, on helping put in place the most efficient collection systems that can be put in place, so that we can all achieve our objective, which is the recovery and the reuse of the plastic, and yet do it at the minimum amount of economic cost. And that's really what we're embarked on. Some countries in Europe are already over 90%. We are working with a number of other governments on all sorts of schemes to see if we can drive up the collection rate. So it's not a question of quantifying it so easily. We obviously will have to work through how we accommodate that over time. But our focus is starting from the objective, which is making sure that we make sure there's a world without waste.
CBD-infused drinks and beverages and food, it looks like it's going to be legal in Canada a little later this year. If and when the FDA decides on this issue, would it be an area that Coca-Cola would be interested in getting into?
I mean, I've used my simple three-step rule for ingredients relative to this one as well, which is it legal, is it safe, and is it consumable? And it's got to cross all those three of those. Not legality is one thing. Is it safe to be consumed, and can it be consumed every day? Because a beverage, you want someone to be able to drink it every day, not for a couple of days and then stop. And I think it's a long way from crossing those three hurdles.